ironically enough, this is the one market that I think you really want to pay attention to. And yet most of the people in the public don't follow any of this at all. Has that euro dollar market turned? We came back down against the lows. We are upticking here, but this clearly is the market that if we're going to focus on anything going forward to sort of tell us that, okay, the whole inflation bugaboo and the crisis in the banking system and all that has been put to bed, it's this orange data set, the euro dollar contract. And I even put out a tweet yesterday going, we better pay attention to this. Now, it's interesting how we ticked up here. This is a 2-day chart. So if we go 1 day, look at that. We actually got a little bit of a W coming in there on a nice test of those lows. So if this behaves itself and, energy prices relatively well behaved, food prices well behaved, well, maybe we'll see this thing actually put in a massive weekly W. That'll be the end of the selling. But until this thing actually does turn, I don't think there's a heck of a lot to get too excited about. So the point being that I don't think we're in interest rates rapidly rising. It almost feels like interest rates are kind of basing. So as a result, where are we? Interest rates rising rapidly, peaking. Are we in that window there? Consumer expectations, consumer confidence actually feeling a little bit better. So that would be sort of over here reviving. That was the conference board. We'll see if that plays out through things like University of Michigan consumer sentiment. Industrial production, don't really have a barometer reading on that to show you. Yield curve, flat and inverted. Well, we all know that the yield curve is very much inverted. Just to show you what an inverted yield curve looks like. There it is. Boom. And you get a little stockcharts.com. Inverted! Ah. So point being with all of this is I like the idea that we're like somewhere over here right now. And financials, real estate, we're looking at some of the tech stocks and discretionary names. Probably Tesla eventually bottoms out as a good sort of proxy on sort of pseudo tech discretionary. Financials looking very interesting, and specifically, it looks like the insurance stocks actually look very bullish here. One of the names that jumped out at us yesterday was Allstate. And let's see where we're here. Allstate up $1.30 on the day, 1% gain. I mean, it's nothing really to write home about. But it looks like we have some bullish sort of upside objectives. If you are botting 1 lows, 2 lows, 3 lows, 4 lows, 5 lows, lots of lows to work with. We're not going to bot this. This is more of an options idea. It's one of the ideas that came out of the meeting last night. Looking at buying the 155s, writing the 165s. If this thing does swish up and we rally all the way up top here, then you get filled. Being long from 155 and looking to sell at 165, that's $10 of intrinsic value on the spread. And you can pick that spread up now for, I think we said that it was about... I guess, what do we have here? I guess about $2. So net down $2. So that's a 5-to-1 risk reward. I guess 4-to-1 is what we have here because max profit's $10 minus the cost to get in. Net delta 0.1. I think Zach would prefer to have like 0.2, but 0.1 works. And to get a double on this thing's got to go to 89.60 or 18.69. That's interesting. I'm not quite sure where we get that. This is a June option, so this is basically playing out into the new year. I wouldn't be surprised in January that we do actually get a bit of a pullback in the market here. Now, the interesting thing about this one is Zach has turned into a really big fan of the outside upside key reversals, the bullish outside upside. And one other strategy we were thinking is we could, because this key reversal signal fired yesterday, it can't do it today now, unfortunately. But yesterday, as it was firing, could have gone and written the 125 put, which is actually down here, collected $7. And then if we break the key reversal low, which is 128.27, we just walk away from the trade, right? We'd still be out of the money, so it wouldn't be like you get exercise. You just have an alert set on the key reversal low and just walk, go and buy the position back. And interestingly enough, this option itself, it's been sitting around $7 because it's got so much time. It's a January 2024 option. But, you can see, like we were saying earlier, if this thing starts rocking and rolling up into these upside objectives, there's 2.618 off of that range. Suppose we could probably now even do 2.618 off of this double bottom. We get pops up into these areas, and this option will come down quite a bit in price. So I'm going to keep an eye on this. This is an interesting way of approaching the key reversals. Like I said, Zach really likes using the key reversals to help him with his spread calculations and when to consider trade ideas. And then, put it all together. This is, I think, actually a pretty good looking A, B, C, D. And then, finally, if we actually think that we're in this part of the cycle, early recession. You hear people talking about recession. Of course, all these, yield curve basically in line there. Interest rates look like they're kind of peaking out. In fact, actually, the longer end of the curve, we have quite a bit of anecdotal evidence that interest rates have topped out. I kind of like the idea of the market in this financials window here. So there's an idea that speaks directly to that kind of thinking. Thank you.